Okay, let's briefly talk about transaction costs and trading Fed announcements with ETFs. So what we have here is the tick data or trade and quotation data for SPY, the S&P 5 SPDR S&P 500 ETF, around the recent Fed announcement that they were lowering the federal funds rate by 50 basis points. So first thing you can see here is we immediately know when the announcement came out, right? So this is 1800. This is UTC, 2 o'clock Eastern time. And so what we want to do here, so I downloaded one thing, I downloaded this data from Interactive Brokers. If you're in my investments class, you have an Interactive Brokers account, and using R, and then created this chart, and I also have some R code here to create the order book. If anyone wants that, I can post that code. But so what I did here is I downloaded the data. It should be timestamped to the millisecond, and then built a best bid, offer, and last trade off of it. So what we want to take a look at here is prior to the announcement, what's the bid-ask spread? What's our transaction cost? So if you look here prior to the announcement, I don't know the extent, how easy this is for you to see, but the bid-ask spread is roughly, it's 3 cents here, 2 cents here. Generally, over this time interval, it's anywhere from 1 to 3 cents. So very low transaction cost. So this is, again, prior to the announcement. There's not so much trading, and the bid-ask spread is low. So, and remember, whenever we talk about bid-ask spreads, that's transaction cost. So basically, your transaction cost for buying and selling SPY is a couple, 2 cents, let's say. So very low. Now, what happens as we get closer, or what happens as the announcement is made? Right. So immediate. Now, I don't know if I've talked on this, if I put up a video where I go over some research I did in natural gas markets. But I can show you like transaction, how in natural gas markets, how quickly is information incorporated into prices. Long story short, one important piece of information from that is how algorithmic traders, high-frequency traders, react to this. So I'm talking about the big firms. So in natural gas markets, within 18 milliseconds, much of the move is done. And the reason, the way this works is information on like this 50 basis point cut is released to news agencies. News agencies have their computer here. High-frequency traders have a computer here, and then the exchange has a computer here, right? Their servers are all located next to each other. So exactly at here 2 o'clock, information goes from the news agencies to the high-frequency traders who act on it, and to the exchange. So one thing to hear is there's no way of you realizing this is a 50 basis point cut and reacting any closer to or any faster than anyone else, right? So basically, if you're going to react to it, what do I have here? I have this is 20 seconds. This is about a minute here. So realistically, you can react in this minute, right? You could maybe do it within. Well, you certainly can react within 30 seconds or so. But so one of the things to consider is in a minute, let's see, where do we have? In a minute here, most of the return, most of the move is done, the initial move, right? But what I want to take a look at here, right, is, and say much of the move is going to be done within, a few seconds. Like I said, really to trade this, you would need to be at the millisecond level. But what we want to look at here is the transaction cost. So what happens shortly after the announcement? The transaction cost here is 62. Okay, so we're well over $1. What are we, like $1.50? So the bid is 562.32, and the ask is 563.83. So we're a little over $1.50. That's a huge bid-ask spread. So we've gone from 2 cents to over $1.50. Now the bid-ask, stays fairly right here. What are we looking at? We're looking at about 50 cents now, so it's dropped from $1.50 to 50 cents, right? And if we go out to, let's go out to like 25 seconds later after the announcement. All right, now we're here to like 10, 15 cents. Still, again, much larger than normal. And let's see, maybe when we get back to normal on transaction costs, let's go out to like a couple minutes after. Now we're down to 3 cents, right? So the one thing to consider here is transaction costs shortly after the announcement are large, right? So one, as a small retail trader, again, you're not really fast enough to get into that, but why would you not want to trade in this interval, right, while the reaction is happening? This is because the bid ask is very high. Right. So what immediately the market makers do is, while this information is being incorporated, there's a lot more uncertainty in the market. There's a lot more uncertainty for a market maker. So what a market maker does is widens the bid-ask spread as compensation to post those bids and asks during sort of a high information event. One thing to keep in mind is this wasn't such a high information event. Market pretty well knew there was going to be a 50 basis point cut, but again, this is generally there's a lot of information being incorporated into prices right here. A lot of uncertainty for the market maker. Market maker posts wide bid asks, which means higher transaction costs for you. So long story short is you don't want to transact throughout here. You'll see this in option markets. You'll see this in in SPY here. You'll see this largely in future markets as well. So, in sum, let me see if I can widen this again. In sum, when events happen in markets, the transaction costs generally get to be very high. Low transaction costs before it, high transaction costs. Very high transaction costs immediately after. Transaction costs can sort of stay elevated for some time, and then eventually, let me go out to here. I mean, here they're pretty. We're at 5 cents here. So if I took an average, I'd say they're probably a couple cents above average, above the pre-event average. Good, yeah. So we don't want to trade shortly after events, and we definitely don't want to get into, try to trade the event. I get some questions from students on, how would you trade this? You could, you could speculate prior to this on what the move would be and how the market would react to it, but realistically, we don't want to trade during the event. Have a great day.